You don't panic when you place a $10 trade, but make that trade $1 million, even on the exact same setup, and suddenly your hands feel different. Your breathing changes. Every candle looks dangerous. Every tiny pullback feels like disaster. Most traders believe that's because the money is bigger. It isn't. It's because your brain stopped seeing a trade and started seeing your life. And that's exactly why some traders can calmly manage positions worth millions, while others fall apart trading amounts that are small by comparison. The strange part is this. Professional traders don't have stronger emotions. They've simply learned one psychological trick that changes what the money means. By the end of this video, you'll understand that trick, and more importantly, how you can begin applying it long before you ever trade large size. Because if you can't trade $100 correctly, $1 million won't magically turn you into a better trader. It will simply magnify every emotional weakness you already have. Here's what most traders never notice. The market doesn't become harder as your position size increases. You do. Imagine placing a trade that perfectly matches your plan. 5 minutes later, it goes slightly against you. Normally, you'd stay calm. But because this trade is larger than usual, you start watching every tick. You zoom into lower time frames. You move your stop. You convince yourself you're managing risk. Deep down, you're managing fear. That's the difference. You think you're reacting to the market. In reality, you're reacting to the meaning you've attached to the money. This is where psychology quietly takes control. Your brain isn't calculating probabilities anymore. It's protecting something it believes is important. Rent, status, security, freedom, your future. The bigger the emotional meaning behind the money, the less objective your decisions become. And that's why many traders perform worse after increasing position size. Not because they forgot their strategy, because they forgot how to think. Here's a simple mental model. Every trader has two account balances. The first is their brokerage account. The second is their emotional account. Most traders only watch the first one. Professionals constantly monitor the second. Every loss, every win, every fear, every burst of confidence either deposits into or withdraws from emotional stability. Once that emotional account gets too low, logic starts making terrible trades. Think about what usually happens after 3 losses in a row. You tell yourself the next trade has to work, not because your edge improved, because your emotions need relief. Now you're no longer trading probabilities, you're trading hope. And hope is one of the most expensive emotions in financial markets. Professional traders recognize this shift immediately. Instead of increasing size to recover confidence, they often reduce size. That sounds backwards, but that's exactly why it works. Amateurs increase risk when emotions become unstable. Professionals reduce risk until emotions become stable again. They're protecting their decision-making, not their ego. Now let's talk about the psychological trick hidden inside the title. How do professionals trade $1 million like it's only 10? They stop seeing dollar amounts. Instead, they see units of risk. This sounds simple, but it completely changes your relationship with money. Suppose your trading plan risks 1% per trade. Whether that's $10, $100, $10,000, or $1 million, the decision is identical. The only thing changing is the number printed on the screen. The process never changes. Professional traders mentally compress money into percentages. Their attention stays on execution. Your attention stays on the cash. And wherever attention goes, emotions follow. Here's where things become dangerous. Many traders increase position size before increasing emotional capacity. It's like putting a beginner driver into a Formula One car. The vehicle isn't the problem, the nervous system is. You can actually see this happen. A trader doubles their size. Suddenly they exit winners too early. They hesitate before entering. They ignore valid setups. They revenge trade after losses. Nothing about the market changed, only the emotional weight did. The market exposed a psychological ceiling. Every trader has one. The good news? That ceiling can be raised. Not by repeating affirmations, not by pretending fear doesn't exist, but through gradual exposure. Professional athletes don't begin with championship pressure. Pilots don't start by landing aircraft in storms. Traders shouldn't expect themselves to emotionally handle massive positions overnight. Confidence isn't created by thinking bigger. It's created by repeatedly succeeding at the current level until that level feels emotionally boring. Boring is exactly what you're aiming for, because boring means your emotions are no longer hijacking your decisions. Here's a practical exercise you can start using immediately. Before every trade, don't ask, "How much money could I make?" Instead, ask, "Can I emotionally accept this loss before I enter?" Notice how different those questions feel. One creates excitement, the other creates acceptance. Acceptance calms the mind. Excitement speeds it up. The best trades are usually placed from a calm mind, not an excited one. Another habit separates professionals from everyone else. After every trade, they evaluate the quality of the decision before looking at the profit. Think over time, this trains the brain to chase discipline rather than dopamine. And that changes everything. Because once your identity becomes tied to following your process instead of making money today, larger position sizes stop feeling like personal tests. They're simply larger versions of the same routine. There's one final realization that separates consistent traders from emotional traders. You don't become capable of trading $1 million the day your account reaches $1 million. You become capable the day money stops changing your behavior. That's the real milestone. The market doesn't care how much you're risking. It only reflects the emotional habits you bring into every decision. Master those habits while the numbers are small, and when the numbers eventually become large, your mind won't see $1 million. It will simply see another well-executed trade.